Okay. So just as a reminder, the webinar will be in English, but we do have interpretation. So I'll give you a few instructions and just a few housekeeping announcements. In the Zoom controls, please click interpretation, click the language that you would like to hear. And if you only want to hear that language, then click on the mute original audio so that everything is clear. Just some basic webinar rules that we would like you all to follow. In Marfan, we encourage a space for learning and respect. During the webinar, all microphones and cameras will be disabled, just so that we respect the webinar. Please introduce yourself and write your full name, country, and organization in the chat. You can also write your question throughout the webinar in the Zoom chat. We will be gathering them all. So at the end, during the Q&A, you guys will be, well, all the questions will be transferred to the speakers, and then they will be able to answer them. If you are participating via Facebook Live, you can submit your question through the Facebook comments section. So just as a disclaimer, the views expressed in the Marfan's webinar series are the sole responsibility of the speakers and do not necessarily represent the opinion or position of Marfan. And now, welcome everyone. Thank you for joining us on our webinar series. Our webinar today is the Mar Insurance Program, an innovative tool for coastal resilience and risk preparedness. I would like to introduce our speakers today. We have 3 speakers today. From Willis Towers Watson, one of our partners. We have Sarah Conway, who's the director at the Ecosystems Resilience Practice within Willis Towers Watson Disaster Risk Finance. We have Maya Danjal, senior associate at the Ecosystems Resilience Practice within Willis Towers Watson. Both of them focus on designing innovative instruments such as the parametric insurance to support the ecosystems and associated livelihoods. And then we have Claudia Ruiz, who is the coordinator of the Reef Rescue Initiative at Marfan, and she has gathered a lot. She has helped a lot through the years to protect the coastal ecosystems of the Mar region. So we will start with the webinar. And just before I forget, if you would like to check our webinars after all of this is done and just check the recording, you can go follow us in our social media and also in our website in the Marfan event. Thank you everyone for joining us. Maya?
Thank you. I think I will start explaining the Mar Insurance Program. Thank you, Sarah, for the introduction and for sharing the screen. So as Sarah mentioned, today we are going to talk about this very innovative tool that we have created in Marfan with the support of several of our partners and collaborators. And this is the Mar Insurance Program, an innovative tool for coastal resilience and risk preparedness. Next slide, please. So before getting into the details of this Mar Insurance Program, we are going to talk a little bit about the Mesoamerican Reef region. As you know, the Mesoamerican Reef region, or Mar, encompasses 4 countries, the entire coast, the Caribbean coast of Quintana Roo, and Belize, Guatemala, and Honduras. And it goes along a little bit more than, or about 1,000 miles along the coastal lines of these 4 countries. 1,000 kilometers, and is one of the largest barrier reefs in the world. It is a very important hotspot, and in shelters a wide variety of biodiversity. For example, over 500 fish species. Some of them are key to the fisheries activities for the coastal communities. Also, the Mar supports more than 400,000 hectares of seagrass and other important ecosystems such as mangroves and coral reefs. The Mar also protects the safety and property of more than 2 million people who live in the areas lower than 10 meters above sea level. All these people depend on important environmental services that the Mar provides. One of these key environmental services is the coastal protection. The MAR protects coastal built capital for more than 25 million in average annual flood damages. A recent study developed by the IDB indicates that one of the environmental services that the MAR provides, which is the coastal protection, has a value of about $430 million annually. The next slide, please. But the MAR, despite all these beauty and benefits that the MAR provides, it also faces several threats. One of the threats is the hurricanes, the storms, that with the climate change, all these storms and hurricanes have increased in intensity and frequency. So basically, these hurricanes, although also are of benefit to the coastal areas, can also impact severely on the coral reefs. For example, they could reduce the live coral cover and damage the structural complexity of the coral ecosystems, leading to the decline in fish biomass, fisheries productivity, and biodiversity. In this way, also impacting on the benefits of the MAR provides, as I mentioned before. Some of these pictures that you can see here are actual examples of the impacts of hurricanes in coral reefs. For example, you can see here that a great amount of debris and detritus can be carried out onto the reef due to the currents and provoked by storms and hurricanes. Also, high sedimentation due to the runoff from coastal inlands can also bury the reef and damaging also the live coral cover. And as you can see, one of these pictures is shown that there is entire crest flipped over due to the impact of the currents and the hurricanes. And the next slide, please. But this disaster and this hazard can be managed. We can manage hurricane risks to coral reefs. And for that, we need to understand and to remember that a coral ecosystem, the coral reef, is an asset, is a natural asset, and actually is considered as natural infrastructure. And the benefits that this natural infrastructure, as I mentioned before, is the protection to the coastal ecosystems. And is often overlooked, and probably we don't have enough funds to mitigate the damages of several hazards on this coral ecosystem, this natural ecosystem, natural infrastructure, I mean. For that, it is important to prevent the damages of this risk to the coral reefs. So how do we build resilience? How do we manage the risk? By preventing. And to prevent the risk, it is important to understand the risk. I mean, a risk analysis needs to be conducted in order to understand the damages, the characteristics of the damages, and the cost that these damages, that the activities to mitigate the damages would take. So we can transfer the cost of the damages by using disaster risk financing tools, such as parametric insurance. It is also important to prepare and in order to do and to respond. In order to do that, building capacities such as response governance, response committees, decision-making people that could lead the response, and also organize and implement managing risk instruments such as response plans is also important. So the response is carried out by reef guardians and training that are trained people that lead and conduct mitigation activities and immediate response activities. These activities have a cost, as I said before, and for that, an insurance payout could cover and could become a very important funding to cover the cost of these response activities. By implementing all that, we contribute to the recovery of the reef, of the coral reef ecosystems, and therefore to the resilience, to build resilience in the Mesoamerican reef. Next slide, please. So what is the MAR insurance program? The main objective of this program is to implement a cost-effective insurance to cover hurricane risk to the MAR region, to enhance the resilience of the coastal beneficiaries who depend on the reef for their livelihoods, food security, and protection from coastal hazards. This program is being implemented from 2021 until now, and thanks to the collaboration of several partners and donors, we work together with Willis Towers Watson and with CCAD and all the government local authorities from environmental local authorities from the MAR region, from the former countries, and with the important financial support of several partners and donors, as the ones you see here on this slide. Next, please. So how the MAR insurance is structured? The MAR insurance program has several components. One of these components, of course, is the insurance, and the reef response is another important component. So for this program to work, we need, of course, an insurance. An insurance mechanism needs to be structured and designed collaboratively. As I mentioned before, there are several partners involved in this program. And at the same time that the insurance is designed, we also create the reef response governance, and the response is established, and the brigades are trained. So in order for the insurance to be implemented, to be carried out, there is a policy holder. In this case, for this specific program, MARFund is the policy holder. We purchase the insurance with donors, with the funds that we raise from different donors. We have raised funding from different partners and donors to cover the insurance premium for the last 4 years. So when the hurricane passes near the covered site, and it is important to emphasize here that this insurance covers the risk of hurricanes. You may ask, if there are other hazards that are covered by this insurance. For this specific case, we are covering only the hurricane risk. So basically, when a hurricane event passes near a covered site, if this hurricane meets the pre-agreed intensity or the parameter, and it could trigger a payout. If the event meets the parameter, it triggers a payout, and the payout is made on hurricane intensity and track location, and this funding goes to the policyholder, goes to MARFund. We receive the payout to finance immediate response. We receive the payout to another mechanism, which is the emergency fund. This emergency fund is a specific mechanism and a specific account that has also been created to respond to other emergencies that may hinder the reef. For example, ship groundings, and in this case, hurricane events, for example. But we use this mechanism to manage and administrate the funds from the payout. Once we receive the payout, we deliver these funds to the reef response groups, the reef guardians and reef response committees that are going to implement the immediate response, the immediate mitigation activities in the reef, on the reef that has been impacted. And of course, a report needs to be generated by the policyholder to demonstrate that the funds have been used appropriately. So on how the funds were used. But in the case that there is an event, such as the last hurricane, for example, Hurricane Beryl, the hurricane it passes below the pre-agreed intensity threshold, or it didn't reach the parameter. So when there is not a payout, there is the possibility for the reef protector, for the reef managers and the response groups to request funds from the emergency fund. As I mentioned before, this is another important mechanism, and we have raised funds from other sources to feed the emergency fund. So when the insurance doesn't trigger the payout, there is the possibility for the response committees and reef managers to request funds from the payout to carry out response activities, always when they see that there has been damage. With Hurricane Beryl recently, we also had a request from an organization in Quintana Roo to provide funds for the emergency fund because they see that there are some damages in some of the key reef areas in Quintana Roo. Next slide, please. So with this, I pass it on to Sarah. Thank you.
Great, thanks, Claudia, and thanks to you, Zara, and MARFund for inviting us to co-present with you today. Excuse me, and of course for including W2W as a core partner in the MAR insurance program. And hi, everyone else, thank you so much for joining us. As Zara mentioned, my name is Sarah Conway, and I lead WTW's ecosystem resilience practice within the disaster risk finance team. I'm going to start first with some basics before turning it over to my colleague Maya to speak more specifically about the structure of the MARA insurance program itself. So let's start, again, with some basics. You might be wondering, how is it even possible to insure something like a coral reef? I think for most of us, when we think about insurance, we tend to think about traditional indemnity insurance. Let's say, for our homes, your home is impacted by a hurricane. There's a lengthy loss assessment process. And, hopefully, depending on the fine print in your policy, you may eventually get your home fixed. In other words, for indemnity insurance, it's based on a qualifying event occurring, assessment of physical damage or loss incurred, and if approved, the insurer would compensate the insured either by paying the amount of the loss or, in certain cases, replacing or repairing the damaged item. For coral reefs, you can probably imagine this would be virtually impossible. You have very little risk information or loss data to inform insurance pricing. There would be, there are no existing, and it would be difficult to come up with loss adjustment protocols. And most likely, the loss adjustment process itself would be exorbitantly expensive and take a lot of time when time is really of the essence when talking about hurricanes and coral reefs. So thankfully, here's where parametric insurance comes in. Parametric insurance, which pays out if a pre-agreed event occurs and does not require a loss assessment process, makes essentially a previously uninsurable asset insurable, which is great, right? Why wouldn't we insure our natural infrastructure or capital like we insure our physical infrastructure assets? Next slide, please. Okay, so we're going to unpack this a bit more. It sounds like an intimidating term and concept, but actually it's pretty straightforward if you'll sort of bear with me as I walk through this rather full slide. So in short, parametric insurance covers the probability of a predefined event happening. For example, a hurricane occurring within a certain geographic area within a certain period of time. It pays out or triggers a pre-agreed amount to a policyholder according to predefined event characteristics. For example, wind speed exceeding a certain threshold value. These predefined event characteristics are selected such that they effectively proxy loss or damage or impact. In other words, you need to see a strong correlation between the variables or combination of variables in certain indices, the trigger thresholds, and the insured's expected loss. As you can imagine or suspect, data is a key ingredient for parametric insurance. Data is essentially what underpins the product itself. So the data against which to set a trigger is identified for the hazard. So for example, rainfall or temperature or wind speed. This data needs to originate from an independent, reliable, consistent, reputable source. And you need to have both historically long data and information to, let's say 30, 40 years to calibrate the index and ensure that it's capturing the right events and to calculate key risk metrics and inform pricing, such as expected loss. In addition to that historical data information, you also, of course, need data that is continuously recorded to be able to assess whether a trigger has been met once the policy is in place. The trigger itself must be clear and robust, right? You need to agree to the location of the coverage or measurement source and thresholds. So for example, to hear, cumulative rainfall at an agreed weather station or the intensity and location of a hurricane. As mentioned, the payout amounts themselves are also pre-agreed and pre-approved, meaning that the insurer pays out to the insured if a triggering event occurs in advance. It's agreed in advance and captured in the policy documentation itself. So insured knows under these type of conditions, we know we will have accessible this amount of resource. This can take various forms. It can be a fixed, binary payment of the entire limit once triggered, or perhaps it can be structured as more of a scaled payment according to the severity of the event. So you could say 50% of the limit pays out in the event of a Category 3 hurricane, or the wind speed associated with the Category 3 hurricane, 75% in the event of a Cat 4, or 100% in the event of a Cat 5. Okay, hopefully you're all with me so far. Just a few more details here. There's a lot of benefits, right, associated with parametric insurance, as you can probably start to see. The first being transparency. These products are based on independent data and pre-agreed triggers and pre-agreed payouts, right? There's no fine print. It's all there in very clear and transparent terms. The second benefit is the payment of the payout, right? There's a very fast claims payment process. Usually the insured receives the payout within weeks of a triggering event. And that's largely linked again to the way in which these policies are structured. Simplicity, right? These are pretty easy to understand products because payouts are based on these predetermined and pre-agreed metrics like wind speed. There's broad coverage, right? So as mentioned, the sort of parametric insurance allows for protection and insurance for natural capital assets like coral reefs and mangroves, and other things that previously in a more traditional indemnity insurance context were not insurable. And finally, unconstrained use of funds, which effectively means that there's quite a lot of flexibility in how the payout becomes deployed by the insured, which again is a nice benefit for folks like Marfund who can agree with partners in those response plans as to the most effective and efficient use of payouts. Of course, right, there's also some considerations that one needs to bear in mind when potentially considering a parametric insurance solution for hurricane risks to coral reefs, or generally, basis risk being the sort of principal one. This arises when the parametric solution does not perfectly correlate with the actual loss experienced by the insured. So, for example, a payout is lower than you would need, or in fact is not triggered at all, despite experiencing a loss. So typically, this is managed or mitigated to the extent possible through the structure of the policy itself. But parametric insurance, insureds do need to accept that there is always going to be some basis risk as a trade-off for the benefits that I described earlier. Data needs is another consideration. So although the data requirements are much lower than for more complex products like modeled loss or even indemnity, there is still a need for a reliable, long historical data set to inform, the view of risk and pricing, and that near real-time information used to assess whether the product actually triggers or not. And finally, insurable interest. This is a slightly nebulous term, but in essence, it means that the insured must have some form of financial interest in the thing being insured. So let's go back to my house example earlier. I have an insurable interest in my house, right? Because if something happens to it, let's say horribly it were to burn down, I would suffer a financial loss. I don't have an insurable interest in your house or your homes, right? But ultimately, the insurer must demonstrate that the policy meets certain regulatory requirements in their jurisdiction. For example, they need to be able to prove that it is in fact insurance for tax and accounting purposes. This usually means that the potential insured or policyholder must be able to demonstrate that it would face a loss if a triggering event were to occur. So you might be wondering, in the case of coral reefs, where is the insurable interest? For example, for an NGO. The NGO certainly doesn't own the reef, but its mission, or if its mission rather, is related to the restoration and conservation of the ecosystem within the covered areas. And if it has a track record of undertaking its mission by putting financial resources into conservation of the reef in question, and if they have agreements with relevant government authorities in place to undertake reef restoration activities at covered areas during the risk period captured in the policy, or could demonstrate that they would be granted said permission to undertake certain response activities if a triggering event were to occur, that may, and most likely, although again, I'm not a lawyer and this is not legal advice, would be sufficient to show a quote insurable interest in the reef itself. Ultimately, this is one of those topics that is dealt with on a very case-by-case basis. So again, please don't treat this as necessarily definitive or as legal advice. But hopefully, again, that was a lot to cover. Hopefully you stayed with me and it was reasonably clear, but again, happy to take questions later on if anything didn't click correctly. Next slide, Maya. Okay, so hopefully, again, I haven't sort of lost you on the insurable interest points or otherwise. And assuming I haven't, you might be thinking, wow, this all sounds really awesome, really amazing. And it is, it's really cool, but it's not a silver bullet solution and it's not applicable in every case. There's also often a bit of confusion or sort of misunderstanding around this fairly new area of insurance and its application to support natural capital, such as coral reefs. So I just wanted to pause for a minute, just for a quick reality check. So first, one thing we often see or hear is the framing that parametric insurance is a financing lever or tool for ongoing conservation or restoration efforts. Not really. So it's important to bear in mind that parametric insurance is insurance. It has a cost, right? Someone has to pay for it. Over time, on average, you should expect to pay more than you receive. That's simply how insurance works. There's no way around that reality. However, right, in certain circumstances, for example, when you need an injection of capital quickly at scale, it is valuable. It is a valuable tool to enable those immediately impactful interventions, which is true in the case of hurricane damage to coral reefs. But for ongoing efforts, it is likely more cost-effective to rely on financing such as grants or tourism fees or concessional loans, etc. Second, there's often some degree of confusion about what it is that we're insuring when we say we're insuring coral reefs. To be clear, we are not protecting the total economic value of the ecosystem itself and all of those amazing benefits that Claudia described. We are, somewhat linked to the first point, right? The payout is structured to ensure that there is sufficient liquidity after a triggering event to support time-sensitive, pre-agreed response activities or any other interventions, such as support for local communities or tourism businesses that the partners involved had pre-agreed to. Third, we often hear people say that investments in resilience or conservation will reduce the cost of parametric insurance premiums. Sadly, no. Pricing of this form of insurance is linked to the risk itself, which is not impacted by improved ecosystem health. Put differently, a healthier coral reef does not change the probability of a hurricane occurring. It does, however, adjust the implications of that hurricane risk, right? Meaning, if your ecosystem is healthier and you think it can withstand higher winds, for example, or may require less response if a triggering event occurs, you could consider raising the trigger thresholds or lowering your annual limit, both of which would reduce the cost of the premium. But on a sort of like-by-like basis, a healthier ecosystem will not impact parametric insurance pricing. Just to kind of clarify those things before we go any further. But with that, Maya, next slide, please. Okay, so back to it. Right. When does it make sense to consider including parametric insurance in a broader suite of conservation interventions and finance tools? First, it likely only makes sense when there's active, ongoing conservation efforts underway. In other words, you're engaging in conservation and resilience building and using the parametric insurance to essentially protect those investments from a hurricane shock event. Second, you, of course, this is pretty obvious, but you, of course, need to have hurricane risk exposure. If you're going to be paying for the insurance, you know, there needs to be a real risk that you're trying to protect yourself from. Third, it's important to have a compelling payout use case that is fit for purpose in your local context and that adds value if deployed quickly after an event. This may vary from place to place, right? So, for example, in some situations, like in the Mar, there is scientific evidence and local buy-in related to the value of immediate reef response. In other cases, and we've seen this to be true in some of the Pacific Islands that we've been supporting, perhaps the sentiment is that actually compensating fishers to not fish, while in parallel, you know, allowing that ecosystem to naturally recover is a more effective approach. So again, there's not a one size fits all in terms of the payout use case. It needs to be very much in your own local context. Fourth, you need to have the right institutional infrastructure and governance mechanisms in place to both receive and deploy a payout quickly, should a qualifying hurricane event occur. This requires, of course, a capable policyholder, whether that's sovereign or local government, NGO, community organization, business. It can really be any legal entity, but they need to be able to receive and transfer funding, and they need to be able to demonstrate, as mentioned earlier, an insurable interest in the coral reef ecosystem. Finally, you need local partners who are sufficiently trained and who have a previewed response plan and, you know, who are ready to go and ensure that if a triggering event occurs, they can engage efficiently and effectively in the response effort. And I think with that, I am going to pass you over to Maya, who will dive into the Mar insurance program structure, but again, happy to take questions later on, during or after the webinar as well. Thank you very much, and over to you, Maya.
Thank you, Sarah. Hello, everyone. It's great to be here with you all. My name is Maya Dangel, and I work with Sarah as part of WTW's disaster risk finance team. So following Sarah's helpful introduction to parametric insurance and establishing the relationship between wind-driven hurricane damage and live coral reef cover, we designed the Mar insurance program by first developing a cyclone reef damage model, which aims to capture that relationship between the level of a hurricane's intensity and the level of damage that it can cause a reef ecosystem. So this relationship is captured through hazard, vulnerability, and exposure factors. In this case, the hazard is the occurrence and severity of tropical storms that can impact the reef. The hazard is the occurrence and severity, the exposure refers to the location and character of the reef itself. So for example, that's the amount of live coral cover. And the vulnerability refers to how susceptible a specific location on the reef is to damage from a specific hurricane intensity. So by quantifying these characteristics, we were able to capture the likelihood of a storm hitting a specific section of the reef and how much loss, in this case hectares, of live coral cover that reef would experience. So we use this to validate the parametric structure with the aim to minimize basis risk, as Sarah had described earlier. So this image on the screen here walks through the analytical steps that we take to come up with a proposed structure. which includes a series of concentric circles that I'll talk about on the next slide. But under the design box, the coral reef damage model here basically validates that we're picking up which key hurricane events are the most damaging to the reef, and we can be confident that having these 4 concentric circles around a coral reef area will help us capture the right storms. So next, to test the product structure, so that's on the analyze box there in the middle, we run a historical storm track dataset through the proposed structure to identify which key historic hurricane events actually would have resulted in a payout. We then check with local partners to validate that the key storm events being picked up by our model are correct and that the proposed payouts from those key storm events correspond with the response cost needs that would have been perceived by the local partners. So this starts the conversation on what level of resource our local partners need to sufficiently and quickly deal with the impacts of hurricanes based on their intensity and proximity to the coral reef area. This is a very iterative process of refining the structure with our local partners so that it's fit for purpose in that context. And then under that last box, we optimize the product by further testing the structure against plausible storm scenarios that aren't in the historical record. So basically storms that haven't happened but could, to essentially see how the structure would perform and what the payouts would look like to get a more comprehensive view of the risk. This can inform product pricing and the program term limit, which is the maximum amount that an insurer would pay out in a certain time frame. So throughout this whole process, we're able to use the coral reef damage model to understand the impacts of hurricanes on the reef in the Mar region specifically, and design a product structure for the Mar. Then we can calibrate that structure using the historical and stochastic analysis, making sure we're picking up the right events, identifying when a product would have historically triggered, and if a product was in place, what level of payout would local partners need to undertake meaningful reef response. So the type of parametric solution that we designed in this case is called a CAT, or category in nested circles structure. The starting point for this type of structure is the concentric circle or ellipses that I mentioned earlier. On the screen here, it is the one in green. It encompasses the core of the healthy reef, and this is what we call zone D. Then we've mapped out 3 subsequent circles around the core zone D, spaced at 25 kilometers, then 50 kilometers, and then 75 kilometers from that inner circle, from that core zone. And the reason why these buffers are spaced at 25 kilometers is to capture the proportional rate of decay in a cyclone's wind speed, and therefore the associated damage with the distance from the storm's center or storm track. So essentially, if you have a storm track going through this area and the wind speed exceeds a pre-agreed threshold, you would essentially receive a payout. Now, I'll get into payouts on the next slide, but on the screen here at the bottom, you can see basically the iteration of the Mar insurance program since its inception, covering the 2021 and 2022 hurricane season, where it initially included 4 sites. Then in its second year, WTW was able to refine the analytics, and in conjunction with efforts from Mar Fund, were able to add new reef areas to total 7 sites. And then again, in its third year, it grew to 10 sites, which we've maintained over the current and 4th year, which now covers the 2024 and 2025 hurricane season. So the concentric circles and ellipses that you saw on the previous screen are accompanied by a payout matrix, which now you can see in the top right. And this specifies the trigger mechanism, in this case, peak wind speed. So peak wind speed has been selected as the hazard parameter to proxy hurricane intensity and therefore damage. So response needs and payouts are captured as a function of the peak wind speed. In other words, each trigger threshold has a corresponding payout, or what you see written here as response levels, like levels 1 through 4, and these vary from zone to zone. The higher the response level, the more the damage, and the higher the payout. So as you can see, the payouts increase as the hurricane wind speed increases, and or as the storm track gets closer to that innermost circle, zone D. This recognizes that the expected damage and therefore the response needs will increase as the hurricane is more intense and or closer to the reef itself. This matrix is then accompanied by a further matrix which defines the payout per response level per site. So in other words, while the payout matrix applies for all of the sites included in the program, for each site, the value at each response level differs. Some sites might be bigger and have more trained reef guardians, or perhaps be more remote and therefore have higher costs. These values also reflect available response capacity at each site, recognizing that in reality, it may not be possible to deploy a full ideal post-storm reef response due to capacity constraints. So let's use an example. We have a hurricane that passes through zones C of one of the covered sites at a peak wind speed of 120 knots. In this case, the policy triggers, and the response cost associated with level 4 would be paid out to Marfund. So you might wonder, what happens if a hurricane passes through multiple sites or multiple zones within a site? After all, several of these circles are overlapping. Well, then a payout is triggered in any and all sites in which a storm track passes through a zone at a peak wind speed exceeding one of the threshold values. So in other words, the Marfund could receive a payout for more than one site following a hurricane event. It can only receive one payout per site, however, for each qualifying event. So in other words, within a site, if the storm track passes through multiple zones at peak wind speeds above the threshold values, Marfund would get the highest level of payout that's triggered for that site. You might also be wondering what happens if there are multiple hurricanes during the policy period. This is where program limit comes in. Marfund could receive multiple payouts during the policy period, but only up until the program limit. And based on historical analysis, we've not encountered a situation where the current program limit would have been exceeded. Okay, so let's take a real life example. To date, the MAR insurance program has had one payout in November 2022 when Hurricane Lisa passed through the Turnef Atoll site in Belize, and it triggered a $175,000 payout. WTW, in addition to designing the structure and helping place it to market, serves as what's called a calculation agent. So this means we're responsible for monitoring potential triggering events, determining if a triggering event occurs, and if so, facilitating the formal process with notifying the policyholder, and in this case, Marfund and the insurer. So this timeline shows the steps that occurred between the period when we first identified the storm developing through all the way through to the first reef response effort weeks later. So a few things to highlight. Let's first start with the speed of the payout. So Marfund received the payout from the insurers. At that time, it was Munich Re and AXA Climate within 2 weeks of the event. So this is quite quick. It's also worth noting the speed at which Marfund was then able to disperse the payout to their local partner in Belize, which was 2 days. So the presence of the Marfund Emergency Fund and the fact that they had agreements in place with a local partner helped to ensure that the resources could be used for reef response very quickly. After this event, we were able to calibrate the payout matrix to better reflect response capacity so that Marfund is paying for the insurance coverage that can be deployed effectively. Thank you very much for listening to me today. This is a great place to conclude the value that insurance has played. So now I'll hand it over to Claudia to elaborate on the underpinning reef response component of the program. Thank you.
Thank you, Maya. The next slide. Thank you. So we have been talking also about the response. What is the response? You may be wondering how this is implemented. So basically, how the reef response look like in practice. The response we have identified that has 4 components. Let's put it this way. Basically, the response has an early warning protocol, a response governance, the brigades, who are the reef guardians or first responders, and of course, the financial instrument. The response is a regional approach that it is implemented by the local and national levels and in collaboration with key stakeholders across the MAR with the support of the governments and the local communities. Next slide, please. Let's talk about the early warning protocol. This is an instrument that was developed by the Nature Conservancy and the National Commission of Protected Areas in Mexico, specifically for the state of Quintana Roo. So, but this is an instrument that has very in much detail all the activities that need to be carried out before, during, and after the storm. And so we have been using this protocol with the support of TNC also to implement it in the rest of the MAR countries and the other MAR countries, Belize, Guatemala, and Honduras. So the protocols, as you can see here, it has different stages and steps. It has a planning stage, the planning and preparation stage. That is very important that the reef response committees take a look at this planning and preparation to be prepared before an event has impacted the reef site. It also includes the damage and assessment activities that need to be carried out, a primary response activities, the secondary response activities, and of course the post-response action, which includes the monitoring and assessment of the activities implemented. So, but this is an umbrella instrument. A more specific or site-specific instrument is the reef response plan. As you can see here, we are showing you an example of the response plan developed by WCS for the sites of Glover's Reef and South Weather Key. This includes very specific activities to be carried out at the site level, but also the communication strategy, the budget to respond to the damages, and all the actors involved, included a network of allies. And the next slide, please. So basically, another component is the response governance. Who are and what are the main functions of the response committees? The main functions of the reef response coordinating committees are included in this protocol that I just mentioned. But this is important. These are important groups that are made of few people. It is suggested 4 to 5 or to 6 people, because this is the decision-making group that are going to oversee that the response is implemented according to the response plan. Of course, there may be some variables according to the event and the context of the situation of the site, but it is important that the response committee is involved also in managing the funds and distributing the funds to the brigades and overseeing that the brigades are carrying out their response activities correctly. We have, with the support and in collaboration with the Nature Conservancy, we have created, formalized and trained 7 response committees in the 4 MAR countries, 3 in Honduras, 2 in Belize, 1 in Mexico, and 1 in Guatemala. And also we have trained almost 200 reef guardians or reef first responders that are part of 20 brigades. The next slide, please. The brigades are the groups of divers and snorkelists that are going to be out in the sea repairing the reef. So these are their objectives of the brigades, is to effectively implement the emergency response actions in order to address the damages caused by storms and coral reefs. We have 20 brigades in the 4 MAR countries, and they are very well trained divers and expert divers that know how and have information, have been trained in coral reef biology and ecology, and also in all the immediate actions to be carried out and to implement the response. Next step. But next slide, please. So, but this response, what is the response? As I mentioned before, the protocol, the early warning protocol, has all the activities that need to be carried out during the response. It is very necessary that once the event has impacted the coral reef, these responders are very well organized to immediately assess the damage. So an important damage assessment needs to be carried out in order to understand how how bad, let's put it this way, how bad is the damage in the coral reef. During this damage assessment, the brigades also will remove all the debris and the sedimentation that is smothering the corals. And they will reattach, stabilize, and recover all the broken corals fragments. And also all these fragments, there are other fragments that are still alive, could be transplanted to other nurseries, to other sites, for example, nurseries. And also the brigades will have to monitor that all these restoration or emergency restoration and repair succeeds, right? So basically, for all these activities, funding is necessary. So the sites could have different types of funding, such as an emergency fund. For example, they could access to the emergency fund, contributions from other partners, from other grants, from other donors, from the network of allies, and of course, a very important financial instrument such as the insurance would also cover the cost of these response actions. Next slide, please. This is in talking about the Hurricane Lisa, the payout and response that was mobilized after this event passes through Turnip Atoll. As you can see here, for example, the brigades that were mobilized during that event were able to assess about 400 sites along the entire Turnip area. These photos which is show here some of the damages that were evaluated and encountered in the area post Hurricane Lisa, and the brigades are repairing and restoring some of the broken corals they found. Next slide, please. So in summary, what are the benefits of this regional approach to finance reef response? So first of all, it is very cost effective because, for example, it is cost effective. For example, as you can see, Maya explained that this is an aggregated premium, an aggregated policy. There are several sites in just one coverage. And this is cost effective because it's less expensive to have an aggregated premium that covering or have single premiums to cover single sites at different countries, in different places. So this is one of the benefits. This could reduce the volatility in payouts and, for example, and as I mentioned, translate into lower premiums. There is a regional payout management process that is very efficient, that is rapid, enables rapid distribution through the emergency fund. So basically, by having a single administration and this emergency fund that we have a fund enables to receive rapidly the funds from the insurance carrier and also to distribute the funds to the response to carry out the assessment and the primary response immediately. And the government support, of course, this program is possible because we have the support from the governments of the former countries. The environmental authorities have been very much involved since the very beginning, since we started the site selection and all the consultations back in 2018. We have the endorsement and support from all these authorities. They have very much involved and they have the interest in continuing supporting the program. We have built also a strategic alliances. These are very important for the program to have the success. For example, we have alliances and collaboration agreements with Willis Towers Watson, experts in reef in parametric insurance modeling. We have also alliances and collaboration agreements with other partners such as the Nature Conservancy that provided the know-how in the insurance process and the feasibility studies at the beginning of the program, and also site selection and the know-how in how to build reef response groups. And of course, other partners that have contributed in very important aspects and components of the program. This program and the components are possible to replicate in other areas and to other risks and assets. Right now, for example, we are replicating the program in the archipelago of San Andrés and Providencia in Colombia in collaboration with Fondo Acción and with the support of ORA. And also we have been working with the Caribbean Biodiversity Fund in order to replicate this program in other areas of the Greater Caribbean. So the response, once you have the data, the governance and the instruments and the funding to purchase the cost of the premium, to cover the cost of the premium, this program, it is very possible to replicate. And also we are working with Costa Rica por Siempre in Costa Rica with the support of ORA and Willis Towers Watson as well, in order to identify, to replicate the program to other assets, to other risks such as bleaching and agricultural runoff. And so before going to the next slide, Maja or Sarah, do you want to comment on this slide too?
Yes, thank you, Claudia. I can quickly come in. So this is a tried and tested mechanism. The initial design period, it took some time as it required necessarily things like analytics and design, setting up the various governance arrangements and partnerships, demonstrating insurable interests, which Sarah mentioned earlier, and educating insurance and reinsurance markets about the structure. So this starting cost, or the starting effort was costly, and it required securing various sources of funding to cover different pieces like the analytics and the program design. Though now we've set this up and we've expanded and renewed the program, it's quite streamlined. And now insurance and reinsurance markets are more familiar with the program. So the market outreach and placement process is a lot more straightforward also. Over to you, Claudia.
Thank you, Maya. The next slide. Here are the sites. So you may be wondering what is covered right now. So this map shows the 10 sites that are covered by the insurance. And as I mentioned before, we started the first coverage, we implemented the first coverage in 2021. This is the first year policy. We included we were able to include 4 sites, 2 in Mexico and 2 in Belize. And the next year in 2022, we included other sites in Honduras, basically the Bay Islands. And during the third coverage, it was possible to include additional sites in Honduras, Stella and Cayos Cochinos, and other 2 sites in southern Belize. And right now, for the fourth year of coverage, we have also coverage for all these sites that you see on this slide in this map. And it is very important also to mention that WCS has contributed for this year coverage for the 2 sites in southern Belize, which are Glover Reef and Southwest Key, but also, they have contributed to the entire cost of the premium for these 2 sites, and the premium is still aggregated for all the sites in the region. The next slide. In summary, then, how the marine insurance program works. This financial solution, as I mentioned before, in this case, Marford is the policy holder. We have purchased the insurance for 4 years with the support and contribution from donors. And what is covered? The hurricane risk. That is covered. When there is an event that meets the payout, the parameter or the agreed parameter, there is a payout that goes into the emergency fund. Marfund receives these funds immediately, and we distribute it to the emergency response groups, the committee, and the brigades to implement the response activities. And last but not least, we want to acknowledge the contribution and collaboration of our partners and donors, the Insur Resilience Solution Fund, who has provided funding for the 4 years of the premium, and also to create the governance and working with the governments and to elaborate several analyses and feasibility studies. The Ocean Risk and Reef Resilient Action Alliance, which has also collaborated to create the response and to create other analysis and risk and feasibility studies for other risks and in other regions as well. And UNDP APSIA, a small grant program, who has provided also funds for the premium and to create the governance and instruments as response plans and trainings in Honduras. And AXA Climate, which is the insurance provider for 4 years. They have given us very good pricing and a very important and key partner as well. The Nature Conservancy, who provided the know-how, and also collaborated with Marfund for several years in order to create the response capacities in the former countries. Of course, our authorities, regional, national, and local authorities in the more former countries, which who have been very much involved in all the process of the program, and of course to you that somehow have provided also our support to this program to be carried out. And with this, we end this presentation. Thank you for listening. Thank you.
Thank you so much, Claudia, Sarah, and Maya for this webinar and for explaining such an innovative financial mechanism. So now we will go to the Q&A. We have a couple of questions and I will read them and you guys can answer. So the first one is, how does climate change affect the way parametric insurance costs and works in general, given the fact that hurricanes are becoming stronger and more frequent? Great question.
Yeah, that's a great question. I'm happy to jump in here, but of course, Maya and Claudia should feel free to come in as well, if anything. So the pricing of insurance policies by the insurance and reinsurance market is based on a recent history of tropical cyclone activity in the area of interest. So this means that changes in the frequency or intensity of tropical cyclones due to climate forcing are accounted for to the extent to which these changes are present in the tropical cyclone history over the past few decades. As mentioned, we're usually looking at sort of a 30 or 40-year data set. It's also worth noting that cyclone frequency and intensity is changing to different extents in different cyclone basins. Since insurance policies are typically priced on an annual, at most 3-year, but usually annual basis, the impact of climate forcing on tropical cyclone characteristics over the longer term, under a sort of 2 degrees C, 1.5 C world, really should not actually impact significantly on insurance pricing. That being said, right, it may be necessary when, ourselves as broker are trying to place a policy in markets to kind of ensure that markets are not trying to embed some sort of additional premium or cost because of their perceived risk for cyclone events. Just quickly, I guess it's also worth flagging from a pricing perspective that generally for parametric insurance, because you're looking at the probability of a certain wind speed occurring within a certain area, the error bar is generally pretty small, which means, we can really hold potential insurers or reinsurers more to a price that reflects the risk than you could, for example, if there was more uncertainty in what it is that you're trying to insure.
Thank you, Sarah. I don't know if either Maya or Claudia want to add anything else. If not, we will. Okay, if not, we will go to the second question. Is it possible to have a similar insurance for events like massive coral bleaching or coral disease outbreaks?
Another great question. So at least from our side, we haven't looked at coral disease specifically, but there are a number of exploratory efforts underway to assess the potential of parametric insurance to protect against or minimize coral bleaching. We've actually been looking at this in a few places, including in Costa Rica, as well as Fiji. So both, sides of the world, both with different stressors and different warming tendencies. For both of these, they would rely on NOAA's degree heating weeks index, with pre-agreed payouts sort of being triggered when the index exceeds a certain threshold value. Without going into too many weedy details, the degree heating week index measures heat stress intensity over a certain period of time, over I think a 12-week period, giving a total in degree weeks. And science, I guess, shows that at 4 degree C weeks, there is significant coral bleaching likely. And if you get to 8 degree C weeks, severe bleaching and significant reef mortality are expected. So when we think about insurance, right, with that kind of overarching context and characteristic in mind, there's sort of 2 critical elements, I guess, that would be critical in determining the feasibility and applicability of parametric insurance for something like coral bleaching, right? On the one hand, there's the question of insurability. So this considers whether insurance markets would actually define, marine heat waves, coral bleaching as insurance, right? Normally for parametric insurance, it needs to be random, it needs to be irregular, it needs to be infrequent events. There can't be too much, cyclical nature to the data set where you could reasonably sort of predict when an event would occur. Secondly, there's a question whether insurance markets would offer affordable policies underpinned by this degree heating weeks index, right? The rate, as you noted, right, the rate of ocean warming and increasing frequency of bleaching events may make policies prohibitively expensive. However, in certain geographies and under certain conditions where maybe the marine heat waves are less connected to the chronic ocean warming, so less correlated with chronic ocean warming, perhaps insurance may be feasible and affordable, quote unquote. In addition to the question of insurability, though, you also need to very much bear in mind the payout use case piece. So as I mentioned earlier, you need to sort of be able to justify paying for parametric insurance and knowing, what you would do with that money if a triggering event were to occur. In the case of coral bleaching, and clearly, I'm not a scientist, I'm not a conservationist, but you need to sort of know how that rapid injection of capital could be deployed to minimize or otherwise mitigate the impacts of coral bleaching, right? So, maybe you have a trigger at the 4 degree C point, and you can try to, minimize and mitigate. So if and when, or if it hopefully doesn't get to the 8 degree C point, but what are you doing with that money? And again, I'm not an expert in this space, but we've seen some really interesting articles about things, as I don't want to say crazy, but as innovative as marine probiotics. So actually, like injecting marine probiotics into these ecosystems. There's also things like pumping cooler water from the deep, or shading the corals. Or potentially compensating fishers to not fish, so that at least brings the fishing pressure off the reef. Probably, there's not going to be a silver bullet solution, and again, much like the payouts associated with hurricane coral reef insurance programs for coral bleaching, it would be very much sort of location and context specific, but you could envision a world where tailoring, certain interventions to a discrete location may yield some local benefits with respect to coral bleaching.
Thank you, Sarah. I don't know if anybody else wants to add anything, or should I just continue to the next one? So really great response, Sarah. Very complete. Okay, so I'll go to the next question. Which is, what is needed to recognize the response brigades? Any committee formality document, training certificates?
I'm gonna take that one. So basically, to formalize the brigades, every time we provide a course or a training for the brigade, we provide certification or a diploma of participation. But also the government's, the response coordinating committee, which is usually led by a governmental organization, would also provide credential, right? A credential, one ID that gives the title of brigade member to the person that holds that ID. That ID could be valid, a credential could be valid for 1 year, for example. and could be renovated after that year if the brigade member is still active. And it is important to mention here that the brigade by itself doesn't work, so basically as a part of the response structure, the brigades need to be in continued communication with the reef response coordinating committee. And this response coordinating committee, as I mentioned before, it is suggested that is led by a governmental organization that is in charge of the reef conservation and protected area management. So through this committee, the brigades can be formalized. With the certification, with accreditation, you can also decide any other instrument that would be useful to you according to the concept of the country and the site. I hope that helps. Thank you.
Thank you, Claudia. Okay, let's go to the next question. Does the basic risk issue mean that the parametric insurance is only appropriate for state and federal governments for a quick payout for recovery and not as a form of reinsurance for insurance companies?
Thank you, Zara. Yeah, I can take this question. So basis risk is the risk of when a payout isn't proportionate or appropriate for the response costs needed. So that's independent from who the policyholder could be for the most part. The policyholder, so long as it's a legal entity, so that could be a federal or state government, is fine. And it's actually good if it's a federal or state government in the sense that they meet a lot of the favorable conditions for a policyholder. So they can demonstrate insurable interest usually, and they can also use this parametric insurance to support broader disaster relief efforts, either locally or nationally. But a policyholder could also be a private company, an NGO, or an association, once again, so long as they are a legal entity. But yes, to confirm, there is a quick payout for the recovery. I hope this answers that question.
Thank you, Maya. I will go to the next question, as it is also about the parametric insurance. So if the payout is less than the cost, how is parametric insurance more appropriate than indemnity insurance to close the protection gap?
I'll take this one again, Zara. This is a great question. So no matter what the insurance is, indemnity or parametric, the costs will exceed the payouts over the long term. But you're hedging to have money in hand when a triggering event occurs, and in this case causes damage to reefs. So parametric insurance in the case of coral reefs helps facilitate those very meaningful reef response actions that Claudia had mentioned. And those are the most effective in the first 30 to 60 days, right? When a reef ecosystem is best placed to bounce back. So this helps lessen the protection gap because these local actors would otherwise have a difficult time getting that money in hand quickly and deploying it quickly and effectively. I hope that answers that question too.
Thank you, Maya. I think we only have one more question. Did the insurance get triggered with Hurricane Beryl? Any one of you guys can answer that one.
Sure, thank you, Zara. Yes, I can answer this one. So part of WTW's role as the calculation agent for this insurance placement, as we mentioned earlier, is monitoring any hurricanes in the region and analyzing whether the policy has been triggered. So this is the same practice that we took for Hurricane Beryl. In the case of Hurricane Beryl, the storm track actually passed approximately 80 kilometers north of Banco Chincoro's outermost circle. So the policy was actually not triggered.
Thank you, Maya. Those were the only questions, really good questions. I don't know if you guys would like to add anything else. We have a few minutes left, just like a closing argument or anything you would like to add.
I just want to thank all the audience for your interest in great questions, and also invite you to follow, the continuation of this program, to follow the Mesoamerican Reef, and to provide also your good practices in order to continue the protection and sustainable use of this great region. And thank you to our partners, Willis Towers Watson.
Thank you. Thank you all. I think everybody liked the presentation. It's a really great financial mechanism, and I would like to thank the three of you, the three speakers, because you did a great job explaining the insurance, parametric insurance and all its components. I would also like to thank the audience. I will be sending a feedback survey in the chat right now. I would like everyone to please respond to that survey so you would help us improve our webinar series. And just to finish this presentation, this webinar, I would like to thank everyone, encourage everyone to follow us on our social media and to join us on our next webinar to learn more about all the initiatives, all the projects that are being done in the MAR region. Thank you all.
Thank you, everybody.
Thank you, everybody. Take care.